Hello friends, good evening everyone. Hope your preparation is going very good, and I just wanted to take 2 hours of your time to discuss few important aspects. So this particular marathon part 2. So yesterday we had some 2 hours, so today I wanted to spend some 2 hours. So first I wanted to discuss few theory concepts. Of course you would have already revised it, but it's my time to just cover up few theory topics and a few problematic areas which are very important from exam point of view. And so those few theory topics which I just wanted to discuss is number 1, that is what are the list of activities which are covered under schedule 1, that is supply without consideration, DRIP. D for disposal of business asset on which ITC is availed, and are related to related party transaction including transaction between distinct person. I for import of services from a related person or another establishment located outside India, and P is principal agent transaction. Remember, principal agent transaction only with respect to goods will be covered under schedule 1. So these are the 4 activities. If these activities are without consideration, it will become supply under 7.1c, and these activities are given under schedule 1. And the second one that I just wanted to discuss is spalled slow. These are the list of activities which are excluded from the supply. So yes refers to sovereign functions of the government, that is all activities of the government other than 4 activities: Department of Post, then transportation of goods or passengers, airport or port services, and services to business entities. These 4 activities are only covered under supply. All other activities of government are excluded from supply, that is yes. P refers to post, that is government post, constitutional post, and nominated post. A refers to actionable claims other than lottery, betting, gambling, and this L refers to legal fees, that is fee collected by the court or tribunal. Another L is sale of land including sale of building where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. And E for employee to employer in the course of employment, and D is death related activities, that is funeral, burial, crematorium, mortuary including transportation of the deceased. Then next S will be sale before import. Sale before import, it can be high C sale or any sale that takes place before import of the goods by way of transfer of documents to the title, that is excluded from supply. Then L refers to liquor license granted by state government. Only state government granting the liquor license is excluded from supply. O is outside the country movement of the goods, that is supplier outside India, that is originating point of the goods outside India, destination point of the goods outside India, and even though its financial implication may be in India, that will be excluded from supply. W refers to warehoused goods under customs which is being sold. So goods will be imported and deposited in the warehouse without payment of customs duty, and those goods will be sold to a person. So in case of sale of that warehoused goods, that is also excluded from supply. Okay, and then next thing that you need to know is about Sir, CG, got, salads. So these are the list of services which are covered under RCM 9 subsection 3. So whenever you are referring to a 9 subsection 3, you need to give the notification reference 13 of 2017. Yes refers to security lending. In security lending, supplier is the lender of the securities, recipient is the borrower of the securities. There are no conditions, it will come under RCM. And I refers to import of services. So here in case of OIDR services, if the recipient is non-taxable online recipient. Who is a non-taxable online recipient? If the person is unregistered and importing services for any purpose other than business or commerce, that is personal purpose, then that person is known as a non-taxable online recipient. Then it will be FCM, supplier outside India will pay if it is OIDR services. Otherwise it will be coming under RCM. Then R refers to renting of motor vehicle. Supplier is the owner of the motor vehicle, recipient is the one who is taking the motor vehicle on rent. Remember, 3 conditions should be satisfied, then only it will be RCM. Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. So then C refers to copyright services, total 4 copyrights: original literary, dramatic, musical, artistic works. So recipient will pay, but in case of original literary, supplier, that is author, can pay GST under FCM. But if author opts to pay GST under FCM, there is a lock-in for 1 year. And G refers to GTA services. In case of GTA services, any person who is engaged in transportation of goods by roadways is only known as GTA, and they will issue a consignment note by whatever name called. Okay, and in case of GTA services, there are 2 options, either FCM or RCM. If it is FCM, the rate of GST will be 12%. If it is RCM, the rate of GST will be 5%. And then another G will be government services. Government services services to business entity. So in that case, if it is renting of immobile property services, if the recipient is registered, then it is RCM, otherwise it is FCM. Other than renting of immobile property, any other services, it will be coming under RCM only, that is business entity will pay GST. O refers to overseeing committee providing services to RBI, no conditions, RBI will pay GST under RCM. Then T refers to transfer of right to use land, that is TDR, FSI and long term lease. In case of TDR, FSI and long term lease, landowner is the supplier, promoter or builder is a recipient, and promoter or builder is required to pay GST under RCM, and the rate of GST 18%, that will be given in the question, don't worry. And then sponsor, yes, for sponsorship services. In case of sponsorship, the one who is organizing the event or sport will be the supplier, and the recipient is the one who pays the sponsorship money. If the recipient who pays the sponsorship money is a body corporate or firm, it will be coming under RCM, otherwise it will be coming under FCM. So condition is recipient should be body corporate or firm. Then A for agent services, total 5 agents we have. Insurance agent to insurance company will pay. Recovery agent to bank or financial institution will pay. Direct selling agent other than body corporate or firm. So the direct selling agent should be other than body corporate or firm, providing services to bank or financial institution. So recipient will pay. What if the direct selling agent is a body corporate or firm? It is not covered under RCM, it will be covered under FCM. Then business facilitator providing services to a banking company, so that will be coming under RCM. Agent of business correspondent to business correspondent, that is also coming under RCM, but not business correspondent service. These are the 5 agents. Then L refers to legal services, that is advocate services or arbitrator services. It will be coming under RCM. Either it will be exempted or it will be coming under RCM, where business entity is liable to pay GST. Advocate and arbitrator service, individual advocate, firm of advocate and arbitrator services. Okay, that is A. Arbitrator service also same. The D refers to director services, director service to company or body corporate. So then company or body corporate will pay GST, provided the director is not an employee of the company. If director is employee of the company, then there is no GST at all. So when director is an employee of the company, if TDS is deducted under 192, then it will be employee. Otherwise it will be other than employee, then company will pay GST under RCM. Last, security agency services. Here the condition is that supplier should be other than body corporate, recipient should be registered, and that recipient should not have registered for composition scheme, and a recipient should also not be government, so registered only to deduct TDS. So then it will be coming under RCM, otherwise it will be FCM. So this is about the list of notified services. And then next, number 4, remember TRSIS. So this refers to 5 inclusions in the value of supply. So what are the 5 inclusions in the value of supply? We are trying to understand. Remember TRSIS. So T refers to taxes, duties and cess by whatever name called other than GST should be included in the value only when it is charged to the recipient. R refers to recipient incurring expenditure on behalf of supplier. So any amount that the supplier is liable to pay but which is incurred by the recipient should be included in the value. And next, S is supplier incurring the expenditure and charge it to recipient. If it is pure agent, it will not be included, otherwise it will be included. Incidental, always included. Any other expenses should be charged before delivery of the goods or before supply of services. Then I refers to interest, late fee or penalty for delay in receipt of consideration, and that will be included in the value. For that interest, we need to take the rate applicable to the original supply. So that interest arises because of non-payment of consideration in an invoice. So in that invoice, whatever GST rate is there, that should be taken on that interest. And then last S refers to subsidies. Subsidy directly linked to the price only will be included in the value, that too if it is from a person other than central government or state government. So subsidy not directly into the price, it will not be coming into the picture, ignore that. Subsidy directly into the price or not directly into the price, how do we know? So we need to check based on whether the subsidy is given with respect to each product sold or each service rendered or not. If the subsidy is with respect to each product sold or each service rendered, then it is directly linked to the price. And in case of directly into the price, if it is from other than CGRSG, then it should be included in the value. Okay, so that is with respect to this. Okay, and so these are the 5 inclusions that you need to remember. Next, what we have is, one second. So then I just wanted to discuss with you about 9 subsection 4, because 9 subsection 4 is an area which was not at all tested, so far. So I just wanted to discuss a 9 subsection 4 that is related to this promoter or builder making inward supply from a unregistered person. Okay, so how the question could be, I am just discussing that. Say for example, you have a look into this question. A promoter or has procured following goods or services for construction of a residential real estate project during a financial year. So name of the inputs and input service. So various inputs and input services are there. Capital goods is also there, and different rate of GST is there. Value of inward supply received during the financial year is there. Whether received from a registered supplier or not, we need to see. Now suppose if you get a question like this, see this is an untapped area, that's why it may come into the exam. So I just wanted to discuss this. And here what is that first we need to do? First we need to take the capital goods. In this list, whether capital goods is there or not. Yes, capital goods is there, and that capital goods purchased from a registered person or unregistered person, purchased from an unregistered person. So whenever capital goods are purchased from an unregistered person, we need to pay GST under RCM at the rate applicable to that capital goods in 9 subsection 4. So therefore here first we need to pay GST on capital goods 40 lakhs into 12%. That is the first step. And then next we need to take remaining inward supplies. In that remaining inward supplies, we need to take out electricity, TDR, FSI long term lease, because TDR, FSI long term lease is anyhow covered under 9 subsection 3, that should be taken out. Then petrol, diesel and natural gas also should be taken out. So after taking all these things, that is TDR, FSI, long term lease, electricity, diesel, petrol, natural gas, so these are to be excluded. And remaining, so here electricity is there, you take out, FSI is there, you take out. And now the remaining inward supplies you need to see. So remaining inward supplies during the year. So this computation needs to be computed on a yearly basis. So remaining inward supply in a year you need to take. Suppose if the remaining inward supplies during the year is 120 lakhs. Out of this 120 lakhs, so we need to check whether cement is there. Cement should always be purchased from a registered person. Otherwise we need to pay GST and RCM at 28%. So in this list of 120 lakhs, yes, cement is there, and that cement is purchased from an unregistered person. Definitely we need to pay GST under RCM. So 15 lakhs we need to take into 28%. So therefore 15 lakhs into 28%, 4 lakh 20,000. Now as good as cement is purchased from a registered person, whenever we pay GST under RCM. So now after taking out cement, you need to see what is the remaining goods. So the remaining goods is, say here, flooring tiles is there, 10 lakhs. So 10 lakhs divided by 120 lakhs. Cement we already paid GST under RCM, so 10 divided by 120. 10 divided by 120 is 8.33. It does not exceed 20%. So that is allowed. Suppose if it goes beyond 20%, what we need to do? So whatever is the excess amount that we purchase from an unregistered person beyond 20%, on that we need to pay GST under RCM. Say for example, it is 25%. So 25% means what is extra? 120 into 5% extra. 120 into 5% is 6 lakhs. On that 6 lakhs we need to pay GST under RCM. So this is an untapped area. This kind of question can be tested in exam. Okay. And then the next thing will be, so TDS. In TDS is applicable only when the value of supply under the contract exceed 2,50,000. So what we do is that how much amount is remitted by the recipient we will be checking. So don't check how much amount is remitted by the recipient. We need to see the total value of supply under the contract. If the total value of supply under the contract exceeds 2,50,000, while doing the total value, take out GST. So if it exceeds 2,50,000, then TDS will be applicable. But TDS will be computed on the amount that is remitted by the recipient. Okay. So that is one point. And next, TDS non-applicability also, it is an area which generally we get confused. That is, suppose if the recipient is located in the same state, supplier is also in the same state, place of supply is in the same state, no issue. But if the place of supply is in the same state but the recipient is located in the other state, for example, this is one case, supplier is located in Delhi, place of supply Delhi, but the recipient is in West Bengal. So it's an intra-state supply. So chargeable to CGST and Delhi GST, but the recipient in West Bengal cannot deduct 1% towards the TDS of Delhi GST. Due to that reason, TDS is not applicable in this case. So this is one such area. And then, so in case of pure agent point, so please remember that there should be certain conditions. So 4 conditions should be satisfied in order to be called as a pure agent. That is, first there should be a contractual agreement, and number 2, the recipient should authorize the supplier should incur, that is the contractual agreement, the supplier should incur only the actual expenditure and charge it to the recipient, and thereafter there should not be any gain out of the transaction, and whatever invoice is not in the name of the supplier but invoice in the name of the recipient, and the supplier should not incur that expenditure for his purpose, so it should be purely for the recipient, then only he will be called as a pure agent. So look out, because pure agent concept also not tested in exam due to that reason. And then next will be, so interest, suppose if the interest, the rate of GST should be the rate applicable to the invoice. So here you can see one product A chargeable at 12%, product B exempted, value 1,50,000. So now in that case, suppose if there is an interest, what we need to do with that interest? So that interest we need to apportion between product A and product B in the value ratio. So why we need to apportion? Because so interest pertaining to product A will be taxable at 12%, but interest pertaining to product B will be exempted. So when interest is being collected for taxable product as well as exempted product, don't forget to apportion that interest between two products based on its value ratio, and accordingly GST payable on the interest, because interest is not taxable, interest is included in the value and chargeable to GST accordingly due to that reason. Okay. Then next thing is about so in this invoice and time of supply, so we have the concept of e-invoice and QR code. So when e-invoice and QR code is not applicable, okay, when e-invoice and QR code is not applicable, so you need to remember biggest, BIGGEST. So when e-invoice is not applicable, B for banking company, I for insurance company, G for GTA services, and next G is government department or local authority, and E for exhibition of film in a multiplex theatre, and S for SEZ unit, not SEZ developer, SEZ unit, and T for transportation of passengers by any mode. This is non-applicability of e-invoice. E-invoice is not applicable to these people. And then remember big toe. What is that big toe? So that is QR code, dynamic QR code and invoice is not applicable to these people. B same, banking company, I same, insurance company, G same, GTA services, another G will be government department or local authority. T also same, that is transportation of passengers by any mode. Here extra O is there, that is OIDR supplier located outside India, and E is exhibition of film in a multiplex theatre. So here SEZ unit and here OIDR supplier, that's the difference here. Okay, so that is with respect to e-invoice and QR code. And thereafter, so this input tax credit, remember that 5% point. So for May 22 exam, still that match credit plus 5% will be applicable. So in exam, whenever they give that this much is the match credit, so take that match credit, so add 5% to that match credit. Remember, while doing the match credit, take out ineligible credit, block credit you take out, whatever is the match credit, to that match credit add 5%. So they will give, so this much of invoices having GST has been reported in GSTR1. How much ever is reported in GSTR1, that will come into GSTR2A, 2B. So that is known as match credit. From that you take out ineligible credit or block credit, add 5%, subject to maximum ITC as per invoices you can take. Okay, so that point is still applicable for your exam. So don't forget to apply that if it is given in the question. And 2A, 2B, it is relevant, anything can be given. Okay, so like 2A or 2B, it does not matter. So both will be taken as the match credits only. Okay, and when we will be able to take the further credit, we will be able to take the further credit as and when it eventually gets matched, we will be able to take the further credit. Okay, so that point also is not yet tested, so it can be tested in exam. And then this question, this is one question which is really very important, that is question related to the meaning of exempted supplies. Okay, so what is that? So whenever we have total 9 exempted supplies points, we need to remember for the purpose of ITC computation. That is also one question which is not yet given. So that is notified as exempted, nil rated, non-taxable. These 3 are exempted anyhow. So apart from that, sale of land, sale of building, and transaction in securities, these 3 are not treated as no taxable supplies. These are not treated as supply at all, but it will be treated as exempted supply. In case of land and building, we need to take stamp duty value, and in case of securities, we need to take 1% of the sale value of the securities. Okay, and then supply covered under RCM is also treated as exempted for the purpose of ITC. Then 2 points, even though it is exempted, but it will be treated as taxable for availment of ITC, that is interest on loans, advances, deposits, other than for a banking company, financial institution, NBFC. And next point will be transportation of goods by vessel from India to outside India. Actually, this interest and transportation of goods by vessel from India to outside India is exempted for payment of GST, even though it is exempted, but it will be treated as taxable for the purpose of computation of ITC. So this question, this area is not yet tested, so there is a possibility. And then, so this something called as rule 42. Rule 42, whenever you get the T1, T2, T3, etc., simple remember, whenever it is exclusively used for exempted, whenever it is exclusively for non-business purpose, or whenever it is block credit, you need to take that out. So remaining credit will be known as common credit. So that remaining credit into E by F will be known as exempted to the extent of exempted turnover. And suppose if there is any inward supply which is partly used for business and partly used for non-business, so common credit into 5% also we need to reverse. So just this much you remember. So because that is also an untapped area which can be tested. And then in case of capital goods, so in case of capital goods, so this is one area that is initially it is used for exempted. At a later point of time, it is used for both taxable and exempted. So what we need to do? Initially exempted. So now used for both taxable and exempted. Now you take the credit and you treat it like a common credit, and for the balance life you need to reverse the E by F. And we need to take the total life as 60 months, at 24 months it is used for exempted. So then don't worry, so we will take the full GST paid as ITC, common ITC, and for the remaining 36 months we do the reversal. Now for last 2 years we are using it only for exempted, so for that 5% for every quarter or part thereof we will take, and we will do the bulk reversal. This is in case initially used for exempted and later used for both taxable and exempted. Initially used for taxable and thereafter used for both taxable and exempted, so what we need to do? So now already we would have taken the credit, now don't take the credit, just treat it like a common credit and do the reversal for the balance life. So minus 5% we are not required to do, that was the old provision. So this is also not yet tested, so this can be asked. Okay. And next, blocked credit, you please revise it once, already you would have done, but go through that block credit once again, because there is one first question. So usually whenever the exam starts, 3 hours you have. First half an hour, you keep a timer for every half an hour, 30 minutes, 30 minutes, 30 minutes, 30 minutes. You divide your entire 3 hours into 6 slots. So first 30 minutes, what you need to do is that you need to complete the MCQ. So when you complete the MCQ, so that is sharp 30 minutes, not beyond that. So that is the maximum time you should allocate for MCQ. Suppose if you are not able to do, it's okay. So in the last we will be able to do if we save time, but don't spend more than 30 minutes. So 30 minutes for MCQ and next 30 minutes for the first question. First question is usually a consolidated question for 14 marks. A lot of points will be there in that. So valuation, input tax credit, even this particular blocked credit, everything will be there. So that will be 14 marks. So there also you need to spend only 30 minutes, not more than that. If you are able to complete the MCQ and the first question in 1 hour, so mark my words, you will be in 80s. So your score will be in 80. Okay. So because the remaining questions you will be able to comfortably write. So half an hour each. So that you have to just write 5 questions. First question over. Now 2 more hours left. So 4 questions. You don't need 2 hours actually. You will be able to complete in 1 hour 45 minutes only. So still 15 minutes will be left in the first question, and the MCQs, if you want to spend that time, you spend that time. Suppose if the remaining questions are lengthy, so then also you will not be worrying. So therefore the target is in the first 1 hour, you should be able to complete the MCQ and the first question. Just keep that in mind. Okay. And then, so here anything else? In input tax credit, that much only. And place of supply. So place of supply, little please be clear, because place of supply, what happens is that whether it is intrastate supply, interstate supply, there should be clear. There is one important point which you should always keep in mind, that is once the place of supply is determined under section 13, services, place of supply determined under section 13. When place of supply will be determined under section 13, either supplier or recipient in India and the other outside India. Okay, one in India, another outside India. Then place of supply determined under section 13. Always it will be deemed interstate supply. Okay, so suppose if the place of supply is in India, then it will be deemed interstate supply chargeable to IGST. So you should not treat it as intrastate supply, that is location of supplier Tamil Nadu, place of supply determined under section 13, that is also Tamil Nadu. It's a deemed interstate supply, so IGST, so don't take it as CGST, SGST, thinking that supplier as well as place of supply is in the same state. Also, even though you determine the place of supply, if the place of supply is SEZ, so then we need to determine it as interstate supply, because supply to SEZ will be treated as deemed interstate supply. These 2 points you please keep in mind. And then on rules, apportionment. On rules also they may be asking a question. So, but that will be easy, just you revise as to what are the basis of apportionment in case of place of supply for that rules. Then next with respect to registration chapter, you need to know, so what is that special category states for which 10 lakhs limit will be applicable? MMTN, Manipur, Mizoram, Tripura, Nagaland. These are the 4 states for which 10 lakhs limit will be applicable. So suppose if you are doing business in more than one state, and if one of the state is MMTN, and if taxable supplies are made from that state, so then we need to take 10 lakhs as the limit. And then for U stamp states, U for Uttarakhand, S for Sikkim, T for Telangana, A for Arunachal Pradesh, M for Meghalaya, P for Puducherry. For these U stamp states, so 20 lakhs will only be the limit, even though they are exclusively engaged in supply of goods, the 20 lakhs limit will be applicable. Okay, so these 2 points. Then next 23 overrides 24. So for example, if a person is exempted from registration, when a person is exempted from registration, they are exclusively engaged in exempted supplies or an agriculturist, or they are exclusively making RCM supplies, then they are exempted from registration. When they are exempted from registration, the 23 will override 24. Even though they are compulsorily required to register, they are not required to compulsorily register, because once they are exempted from registration, they are exempted from registration only, and compulsory registration don't apply. And thereafter, this Aadhaar authentication is not applicable to whom? Aadhaar authentication is not applicable to whom is also a theory area which can be tested. That is, so when you need to remember easily, first individual. For individual, when it is not applicable, not a citizen of India. Number 2, for HUF, when it is not applicable. For members other than Karta. For partners, when it is not applicable, other than managing or authorized partner. Okay, then for any other entity, when Aadhaar authentication not applicable, other than authorized signatory. And 4 points. Then family of government. Government family means central government, state government, local authority, public sector undertaking, and statutory body. 4. Okay, central government, state government, local authority, statutory body, public sector undertaking, government family. So first 4 points, next 4 points, then UIN holder. So for these 9 people, Aadhaar authentication is not applicable. So this can be asked as a theory question. So for that reason. And then the next theory question that could be tested is, what are the cases where registration will be cancelled? So 3 cases: transfer or discontinuance of business, change in constitution resulting in change in permanent account number, no longer liable to be registered, and then contravention of the provisions of the rules or act, and person opting for composition scheme not filing 3 consecutive returns, or normal scheme not filing 6 monthly returns, registration obtained by fraud, and obtained voluntary registration, not commence business within 6 months. Okay, these points. Nowadays, there is a possibility of one more question. What are the provisions, contravention of the provisions that leads to cancellation of registration? So these are the contravention of the provisions that leads to cancellation of registration. Number 1, you are not conducting business from the place where you have obtained registration, or you are issuing invoice, so improper invoice you are issuing, or anti-profiteering provisions you have violated, or you are violating the provisions of Rule 10A, that is not furnishing the bank details within the time, or avails input tax credit in violation of section 16, conditions for availment of ITC. Liability in GSTR 1 is greater than liability in GSTR 3B for 1 or more tax periods, or you violate the provision of Rule 86B. Rule 86B is payment of 1% of the gross liability through electronic cash ledger. Okay, so if there is any violation of this, this is known as contravention of the provisions that leads to cancellation by the officer. Okay, so that is this. Next one, so apart from this, in composition scheme, so in composition scheme, so it is a simple area only, but what you need to know is that, so a person who is into composition scheme 10.1 can provide the services, and that services they can provide up to 10% of the turnover during previous year or 5 lakhs, whichever is higher. For this 10% of the services, so we need to take the rate applicable to the trader. So whatever is the rate that is applicable to the trader, that rate should be taken. Okay, so that is 0.5% CGST, 0.5% SGST on the taxable turnover should be taken for that services. Okay, that is one important point in this. Then we have S9 RCM. What is this S9 RCM? So composition scheme is not applicable in these cases. So all these should be seen for the current year. Yes, for supply of services other than supply of food or up to 10% limit. Other than that, they cannot opt for composition scheme. N for non-resident taxable person. I for interstate supply of goods or services. Another N is non-taxable supplies, non-resident taxable person. Non-taxable supplies means alcoholic liquor for human consumption and petroleum products. If you are making, you cannot opt for composition scheme. Non-resident taxable person, a person who come from outside India to India and who is not having any physical place of business in India, is known as non-resident taxable person. Then E for e-commerce operator, supply of goods or services. Supply of goods or services through e-commerce operator also cannot opt for composition scheme. And R for, that is RCM. So in case of RCM also composition scheme not applicable, we need to pay GST at the rate applicable to normal scheme only with respect to RCM supplies. C for casual taxable person, and M for manufacture of notified goods. What are those notified goods? Ice cream, edibilized, pan masala, tobacco and tobacco products, aerated waters. So these cases composition scheme is not applicable. Then compulsory registration. Who are required to compulsorily get registered? I creations compulsorily required to get registered. I for interstate supply of goods, only interstate supply of goods, not interstate supply of services. C for casual taxable person. R for recipient liable to pay GST under RCM. In case of interstate supplies and casual taxable person other than handicrafts only, compulsorily required to get registered. RCM, recipient liable to pay GST under RCM. 9.3, not 9.4. And then E for e-commerce operator. A, agent making supply on behalf of principal. When agent is making supply on behalf of principal, whenever he issues the invoice in his name, he is making supply on behalf of principal. Compulsory registration. Then T refers to TDS, TCS. I for I input service distributor. Then O for OIDR supplier located outside India and making supply to a non-taxable online recipient in India. And N refers to non-resident taxable person, and S refers to supplier of goods through e-commerce operator. So these are the cases that they are compulsorily required to get registered. So that is this. Next, in case of 10.2a, so 9 RCM are the conditions. So this is in case of section 10.1, and in case of 10.2a, it will be 9 RCM. It will be 9 RCM. Okay. Next. So that is about composition scheme. Then exemptions. So in exemptions here, so you have to just go through those exemptions once. So already I hope that you have done that. If you have not done also, please revise it once again, because without a question on exemptions you will not get. So that much important it will be. And then what are the various minor heads? So in case of electronic cash ledger, so there will be 5 minor heads, TIPFO. So tax, interest, penalty, fee and others. And we can use electronic credit ledger balance for payment of tax dues alone, but we can use electronic cash ledger balance for payment of all these things. So this, and then here 86B is there. So 86B is one area, so which can be tested, that is payment of 1% of the liability through cash ledger. But that 86B is not applicable in 3 cases. That is, you have deposited so more than 1 lakh in each of the last 2 years, or you have not received a refund of more than 1 lakh in the preceding financial year, then only it is applicable, which means if you have received the refund, then it is not applicable. And not paid more than 1% of total tax liability accumulated. So refund under which head? Refund of unutilized ITC. So then only 86B is not applicable. Okay. Suppose if it is refund of any other case, that is a refund on account of export upon payment of IGST, then 86B will be applicable. And in returns, so to whom Annual return is not applicable. Annual return is not applicable in which cases? Remember tonic. So in case of tonic, annual return is not applicable. T for TDS deductor, O for OIDR supplier, non-resident taxable person, input service distributor and casual taxable person. For these people, annual return is not applicable. TDS deductor, OIDR supplier, non-resident taxable person, input service distributor and casual taxable person. Okay, so that is with respect to this. And in returns, so this late fee is something which is a latest amendment. So that late fee alone you need to. Then QRMP interest already we discussed in the previous, that is yesterday's marathon. So beyond that, nothing is required in QRMP. And next one is in e-way bill. So that 50,000 limit will be computed including GST, and remaining points we have already discussed while discussing the time limits. Then assessment, accounts and records. What are the various accounts and records to be maintained? So remember, various accounts and records, we have I formats. These are the various accounts and records to be maintained. I for inward supply, F for foreign trade, import and export, O for outward supply, R for RCM supplies, out of inward supplies and outward supplies. So we need to separate RCM supplies. M for manufacture and production related details. A for advances received, adjusted and paid. T for tax details. S for stock of the goods. A person who is under composition scheme is not required to file T and S. It is not required to maintain T and S. Only I forma. But a normal person I formats. Okay. So that is related to the accounts and records. And next, so offences and penalties, we need to remember. So what are the cases where section 122 subsection 1 offences and penalty will be 100% of the tax or 10,000 whichever is higher. So that is bio discredits TFT. Bio discredits TFT. So B for books of accounts default. I for invoice default. Invoice default means not giving proper invoice or giving fake invoice or invoice without supply, etc. O for obstructing an officer from doing duty. D for disposal of goods while detention or seizure is operational. I for input tax credit default. S for supply with GST of another person. And C for collected tax but not paid within 3 months or collected amount as tax and not paid within 3 months. R for registration related default. E for erroneous refund, and D for dealing in goods liable for confiscation. This D is disposal of goods while detention or seizure is operational, and another I is ISD default. T for TDS or TCS, and S for suppression of turnover. Another T is tampering material evidence, and F is failure to supply information when asked for, and next T is transportation related default. So these are the various defaults for which the penalty will be 100% of tax or ITC or refund or 10,000 whichever is higher. Then what are the offences that leads to imprisonment? So offences that leads to imprisonment is bio discredits TFT minus ISRDSTT plus abetting to commit an offence, plus abetting to commit offence. So what is this? Bio discredits TFT already we know. ISRDSTT. I is ISD default. S is supply with GST of another person. Registration default. Disposal of goods while detention or seizure is operational. And S refers to suppression of turnover. 2 T's, that is TDS TCS default and transportation related default. So that will not lead to any imprisonment, but other offences plus abetting to commit these offences leads to imprisonment. So that is this. And then arrest, when arrest will be applicable? Arrest will be applicable in case of invoice default, ITC default, and collected amount as tax and not paid within 3 months. In these 3 cases, if it is exceeding 2 crores, then arrest. Okay. And if these IIC, invoice default, ITC default, collected an amount as tax not deposited within 3 months exceeds 5 crores, then it will be known as cognizable plus non-bailable offence. Cognizable plus non-bailable. If it exceeds 2 crores, then arrest will be applicable. Okay. So that is this. And next, so in appeals, so mainly pre-deposit computation, so that can be tested, and demand and recovery, no, already we discussed mainly time limits and the penalty that will be there on that. Refunds, yes. So in this refunds chapter, one student has requested me so for doing a comprehensive sum on both the refunds. Okay, I'm just doing one sum related to that. So look into this question. Kailash Global Private Limited supplies various goods in domestic and international market. It is engaged in both manufacturing and trading of goods. The company is registered under GST in the state of Karnataka. The company exports goods without payment of tax under letter of undertaking in accordance with the provisions of 16(3)(a). So that is, they are going for export upon letter of undertaking, LUT. So now, so this case, which means that without payment of GST, so they will be claiming refund of unutilized ITC. First, export of product A. So assessable value under customs, export duty is levied. So in case when the goods are exported, chargeable to export duty, refund of unutilized ITC is not available. That is a restriction. So in this case, refund of unutilized ITC is not possible. Then domestic supply of taxable product B during the period excluding tax at 5%. Inputs used in manufacturing such goods are taxable at 18%. So it is an inverted tax structure. How? The GST rate on outward supply is less than the GST rate on inward supply, which means it is an inverted tax structure. So in case of inverted tax structure, so refund of unutilized ITC is available, and it should not be a notified product for non-applicability of refund of unutilized ITC. Yes, it is not a notified product, so we can claim the refund in this case. Supply of goods to EOU. Supply of goods to EOU is deemed export. So in this case, so ITC has been claimed by the recipient, which means that supplier is not claiming refund, recipient is claiming the refund, which means supplier will treat it like a normal sale only. And fourth case, export of exempted supplies. Export of exempted supplies is also zero rated, and we can claim the refund in this case. So this is export refund. Export refund, that is refund of unutilized ITC on account of zero rated turnover. Now there are two refunds which are applicable in the same question. So first, what we need to see is that, what are the inward supplies on which we can claim the refund. So in case of inverted tax structure, we can claim refund only on inputs, but in case of export, we can claim refund with respect to both inputs and input services. Okay, first we will take inverted tax structure refund. What we need to do? So formula will be very simple. So first we need to take net ITC. So net ITC into inverted turnover divided by adjusted total turnover. Inverted turnover divided by adjusted total turnover, and after that we will be taking out so GST on inverted turnover. GST on inverted turnover. The balance is known as the unutilized ITC, which we will get as a refund. Okay, so first net ITC, if you see, only inputs we need to take. We should not take input service and capital goods. So inputs is what, 3,50,000, but including 50,000 on export of exempt supplies. Yes, we can take that, because export of exempt supplies is what, zero rated. On zero rated we can take ITC, there is no restriction. So therefore entire 3,50,000 we will take into inverted turnover. What is the inverted turnover here? The inverted turnover is 10 lakhs. So we will take 10 divided by adjusted total turnover. Adjusted total turnover will be 7 lakhs plus 10 lakhs plus 5 lakhs plus 6 lakhs. So that will be 28 lakhs. So we got this minus inverted turnover into GST rate. What is the inverted turnover? 10 lakhs. What is the GST rate? 5%. So 10 lakhs into 5%. Now 3,50,000 into 10 divided by 28 will be 1,25,000. From this 1,25,000 we need to deduct. So 10 lakhs into 5%, that will be 50,000. So therefore 75,000 is the refund of unutilized ITC on account of inverted turnover. Then suppose if it is like plus export also. In case of export, how much will be the refund? So again same net ITC. Net ITC into zero rated turnover. Zero rated turnover divided by adjusted total turnover. Okay, zero rated turnover divided by adjusted total turnover. So what will be the net ITC? Now when you take net ITC, you take both inputs and input services, but excluding blocked credits. Only match credit should be taken here. Only match credit should be taken. Block credit should be excluded. So therefore inputs 3,50,000, input services 2 lakhs, and take out blocked credit 18,000. And remember, only match credit should be taken. In exam, suppose if match credit is given, that match credit should be taken 5,32,000. 5,32,000 into zero rated turnover. What is zero rated turnover? On which we claim refund of unutilized ATC. Not all zero rated turnovers, because even in this case the first one is also export, that is also zero rated, but you should not take that. So we should take only zero rated turnover on which we are claiming the refund, that is 6 lakhs. So divided by adjusted total turnover, same 28 lakhs. Okay, and when you take this 6 lakhs, remember, so we have a comparison. This 6 lakhs will be subject to maximum 1.5 times of the domestic turnover. What is 1.5 times of the domestic turnover? 5 lakhs into 1.5 will be 7 lakh 50 or 6 lakhs, whichever is lower only will be taken. So that is correct only what we have taken. So therefore 5,32,000 into 6 lakhs divided by 28 lakhs. So that will be 1,14,000 will be the refund. So 75,000 plus 1,14,000 will be the refund, but this refund is subject to balance in the electronic credit ledger. So that is this question. Next, one more important point is that if the proceeds are not realized within the time prescribed under FEMA, whatever is the refund that we have already claimed on goods. In case of services, that point will not come, because in case of services we can claim refund only when we realize the proceeds in foreign exchange, but in case of goods we can claim the refund even though we have not realized the proceeds in foreign exchange. So whenever we claim the refund, if the proceeds are not realized within the time prescribed under FEMA, whatever is the refund that has been given to that is an erroneous refund that will be recovered along with the interest. Okay, so that point you should remember. Next, accounts and records already we have seen. So Gst Practitioner. So these are the various concepts which you need to focus upon for GST. Then in customs, so taxable event, mainly what is the relevant date for determination of rate of duty? So that much on loan, because in case of goods imported, we need to take date of presentation of bill of entry or grant of entry inwards, whichever is later. In case of aircraft and vehicle, it is date of presentation of bill of entry or arrival of the vessel, arrival of the aircraft, whichever is later. But in case of warehoused goods, for exchange rate, it is the date of presentation of into bond bill of entry. For rate of duty, ex bond bill of entry will be relevant. In case of exports, for exchange rate, it is the shipping bill date, and for rate of duty, it is the late export order date. So that will be crucial, and CBIC notified date only should be taken. And now bill of entry has to be filed before the date of arrival. It's not after the date of arrival. Before the date of arrival, the bill of entry should be filed. Otherwise, there is a late fee. How much is the late fee? For 3 days delay? Delay up to 3 days, it will be 5,000 rupees per day. For the delay beyond 3 days, it will be 10,000 rupees per day. And can we file a prior bill of entry? Anytime prior we can file, but not before 30 days. So before 30 days prior, we cannot file a bill of entry. Okay. So that is that. Then here we don't have, no, this already I discussed in rocket revision in 3 hours. The quick concept, so that much only is sufficient here. Then there is one particular area which you need to keep in mind, that is transit and transshipment. So whenever there is a transit freight, so transit freight means what? The same vehicle or vessel which is bringing the goods into India is taking to another port or airport. So this transit freight should be included, okay, in the value. Whereas if it is a transshipment, another ship, suppose if it is in another ship, then that will not be included. So if we take it into another ship, and if that ship is bringing the goods, so then the transshipment freight will not be included, only transit freight will be included in the value of the goods. That is one point. Then next thing, usually we will be taking 20% of FOB, okay. So generally we will take air freight will be restricted to actual or 20% of FOB, actual or 20% of FOB, whichever is lower, okay, whichever is lower. And even when the freight is not known, so freight not available, even when the freight is not available, we will be taking 20% of FOB, 20% of FOB will be taken. But remember, whenever you are taking this 20% of FOB, while counting FOB, okay, while counting FOB, we need to include, you know, cost of transport from factory of exporter and loading charges, okay, and loading charges. So we need to include, so from the factory of the exporter and to the port and loading charges, both should be added in the FOB. And thereafter you need to arrive at 20% of that FOB. And when you take 20% of FOB, these two things, for example, you know, we have factory cost is $10,000. Then cost of transport from the factory of the exporter to the airport is say $500 and loading charges is say $100. Now this 500 and 100 both should be taken into FOB. So what will be the FOB? Now the FOB will be $10,600 will be FOB. And on this $10,600, 20% should be taken as the freight, maximum freight. So 10,600 into 20% when you take, so $2,120 will be taken as the freight. Now don't add 2,120 to the FOB to arrive at the CIF price. So out of this 2,120 minus $600 you need to reduce. Why $600 you need to reduce? So these two things is already there in the 20% due to that reason. So 2,120 minus 2,120 minus 600 when you reduce, so 1,520 should be taken as the freight. 1,520 should be taken as the freight. This is one adjustment which you need to keep in mind. Okay, so cost of transport from factory of the exporter to the airport or port and loading charges in the airport or port will be added to the ex factory cost to arrive at the FOB price. On that you need to take 20%. When you take the 20%, so this 500 and 1000 you need to reduce. Suppose if you are not taking 20%, then normally you do. If you are taking 20% alone, keep in mind that these two should be reduced and this much only should be taken as the freight. So this should be added as the freight to the FOB. So $1,520 should be added. Okay, this is one adjustment, very important adjustment that you need to keep in mind. So this is in valuation, and apart from that there is nothing in this. Okay, fine. So I just I don't want to waste your time, and then one more area also you need to know, that is TIS DCR. TIS DCR. So we need to apply the valuation rules in case of import in this sequence only. T for transaction value, if not identical goods, if not similar goods, if not deductive value, if not computed value, if not residual value. Okay, and then next this time don't focus much on baggage, please focus on the duty drawback, because last attempt, that is December attempt, they have already asked a question on baggage. I don't think so a baggage question will be asked. So please focus on duty drawback, because between duty drawback and baggage every time one question will be asked. So this time maybe it could be duty drawback. So please focus on duty drawback this time. Okay, so fine. So with this, then warehousing also there is a possibility of asking a question. Mostly warehousing interest computation only they will be asking. Okay, and with this I want to conclude. I don't want to take much of your time. So reason being, so already you are into the preparation. I just wanted to discuss few things. So maybe if these areas, whatever I was telling in this video, if you have not covered up, at least please cover these areas, so that you know, tomorrow when you go for the exam you will be able to do. And tomorrow from morning to afternoon I will be available in Zoom. So whatever is your doubts you can call. I'll be posting the Zoom link in my Telegram. Even in Telegram also I'll be active replying to your queries. So please join my Telegram channel. So that is THARUN'S Brainery. In Telegram, THARUN'S Brainery, there is a discussion group. So please join that group. Whatever is your query, so you please put in that. I'll be able to reply, because don't put it in every place, because I'm active in the Telegram. Whatever is your queries, I'll be able to solve, and even Zoom also I'll be available tomorrow to clarify your doubts. Okay. Thank you. Apart from this, anything else you wanted me to do now? Okay. Deemed export turnover should not be included, right? Yes, deemed export turnover should not be included. If the supplier is claiming the refund, the turnover should not be included. Adjusted total income will not include turnover for which refund is claimed under deemed export. Yes. Should export to you be reduced? Only when the supplier is claiming the refund, we need to reduce it. If the supplier is not claiming refund, we don't have to reduce that. Okay. So when recipient is claiming refund, when supplier is claiming refund only, we need to reduce. When recipient is claiming refund, for supplier it is as good as a normal sale only. Okay. Difference between GSTR 2A to B, so that's what, it won't be tested. Even if it is tested, it's a simple point only. 2A will be a dynamic document, 2B will be static. So whenever GSTR 1 of the supplier is updated at a later point of time, that will be reflecting in GSTR 2A, but not in 2B. Okay, that's the basic difference between 2A and 2B. Then next thing is that TDS TCS information will be there in 2A, but it will not be there in 2B. Okay. Then anything else? Fine. Thank you. And so just quickly go through this video, don't waste your time and complete your preparation. Sir, while computing quarters in various places, how to calculate? So calendar quarter only we should take, we should not take 3 months as one quarter. Calendar quarter only should be taken. For example, 25th March 2022 to 8th of October 2022. So like this, if it is given, how many quarters it will be? Now March month is coming, so even if one day is coming in that quarter, you take it as one quarter. So therefore April, Jan, Feb, March, one quarter, Jan to March. And then second quarter will be April to June, and then third quarter will be July to September, and fourth quarter in October, even few days are there, you will be taking as one quarter, so October to December. So therefore how many quarters here? 4 quarters. So we need to take calendar quarter, even if one day is there in that quarter, so that should be taken as one quarter. Even if one day is there in that period between 3 months, so that should be taken as one quarter. Okay. Then in the above example, insurance will be calculated on 10,600, right? Yes. Insurance will be calculated on 10,600 only. So on FOB price only insurance will be computed. Definitely on this only, no doubt. Next, important areas in FTP. So mostly in FTP, they may be asking on the rewards, various reward schemes are there, advance authorization, EPCG. So mostly on that. So you quickly revise that. So in my rocket revision, one FTP video last is there, hardly I have taken in some 15-20 minutes only. You please revise that, that will be sufficient. Then business facilitator never pay GST, but business correspondent will always pay GST. Correct, because business facilitator outward supply recipient will pay GST under RCM. On inward supply, supplier will pay, but business correspondent on outward supply also business correspondent will pay, on inward supply also business correspondent only will pay. Okay. And yes, all the very best for your exam. Definitely you will do well, don't worry. So with full confidence you go. Okay. Rocket revision book available in soft copy. That no dear, that's not available, but check from our office once. Fine, thank you, take care. And so I'll be available for your doubt clarification. So whatever is your doubts, you can. Okay. Presentation tips. Ensure that for theory questions you are giving clearly the reference, provision, discussion and conclusion. That checklist you should be there. Provision, first reference, provision, discussion, conclusion. For practical questions, reference, provision, computation, conclusion. Okay. Then to the extent possible, please give the notes whenever you are writing the answer. So try to give the notes in the answer itself. Okay. So because for notes only you will be getting marks. Don't forget to write whatever is being processed in your mind. Ensure that you are writing as a notes. Don't forget that. Okay. Then yes, thank you. Take care. Yeah.